Hi, I'm Saima, an experienced management consultant. I've spent last 12 years in large organizations providing advisory and consulting services to business clients within the financial services, capital advisory, sports media, and marketing and advertising sectors. The financial models being offered at Finanalytix Lab provide businesses, investors, and financial professionals to analyze performance, forecast future scenarios, and make data-driven decisions. The financial models being offered at Finanalytix Lab provide businesses, investors, and financial professionals to analyze performance, forecast future scenarios, and make data-driven decisions. Forecasting business revenue is a critical component of financial planning, budgeting, and strategic decision making. A well-structured revenue model helps businesses estimate future sales, allocate resources efficiently, and evaluate growth opportunities. A per-unit revenue forecast projects the revenue generated by each unit of a product or service over a multi-year period. This approach is useful for businesses with measurable unit sales, in the case of physical products, software licenses, or service hours. So the model we are using over here is showing you the key components of a per unit revenue forecast. You are able to see the number of units sold, and in the case of projected sales volume, you can also use that for licenses or hours. Then you can see the price per unit, revenue earned per unit sold. That can also include discounts, tiers, or inflation adjustments. And then you can see the revenue per unit. The approach we have used is using three different scenarios. So we have taken the base case, we have also taken the best case and the worst case scenario. You should be able to select the required scenarios from the drop down cell, and it's highlighted in blue color. Once you have changed the values, you should be able to see the changes in the right hand side graphs, and you can see the changes have been updated on year-on-year basis as well. Hopefully this model will be helpful in your day-to-day professional life. Hello, today we are going to cover off sales return on investment tracker for hardware and software. Are you struggling to track the true return on investment of your hardware and software sales? Legacy systems often lack real-time insights, leading to missed opportunities. But what if you could compare your current solution with a smarter, data-driven alternative? Let's dive into a detailed breakdown. Let's see the current solutions. Many companies still rely on spreadsheets, tedious, error-prone, and slow. Missing or duplicate entries can distort your return on investment calculations. Hardware and software sales are often tracked separately, making it hard to see the full picture. This leads to inefficiencies in forecasting and resources allocation. Delayed reporting means decisions are based on old data or historical data. By the time you spot a trend, the opportunity may be gone. Without predictive insights, you are making educated guesses, not data-driven strategies. So, what if your sales team could instantly see which hardware and software deals deliver the highest return on investment? Legacy tracking methods are costing you time, accuracy, and revenue. So we'll expose the hidden inefficiencies of your current system, reveal a next generation return on investment tracker can unlock smarter decisions, faster deals, and higher profits. So let's crack on. So many companies track hardware and software sales in separate systems: CRM for deals, spreadsheets for costs, and financial tools for margins. This fragmentation means you never see the full picture. The average company loses 12% of revenue due to poor sales tracking system. And then manual entries leads to mistakes, wrong discounts, missed renewals, and incorrect profit calculations. One error can distort your entire return on investment analysis. By the time you get last quarter's ROI report, the market has already changed. Static data means reactive decisions, not proactive strategies. And without integrated tracking, you miss obvious opportunities like pairing high-margin software with compatible hardware deals. Companies using siloed systems miss 27% more cross-sell opportunities, and that's a report published by McKinsey. So the new solution is having a unified hardware and software return on investment tracking. Now, what you can do is track everything in one place: hardware margins, SaaS renewals, and service contracts. See which bundles drive the highest lifetime value. You can clearly see when discounts erode profitability or a customer's software usage signals upsell potentials. And on top of that, you can use AI-powered forecastings like machine learning analyzes historical trends to predict future return on investment, so you can adjust pricing and promotions before competitors do. Motivate your team with transparent, accurate commission tracking based on real profitability, not just revenue. And see how your margins stack up against peers and identify areas for improvement. Businesses using AI-driven sales tools see approximately 40% faster decision making, according to Forbes report. You can also perform return on investment comparison before versus after, like a side-by-side comparison. So let's see some metrics over here. Time spent on reporting. Old system was 15 hours per week and new system is 2 hours per week. So the total improvement is 87% faster. Deal visibility. Old system was showing 30 days delayed. New system is showing real time. And the improvement is instant insights. Forecast accuracy. Old system was showing plus or minus 20% variance. New system is showing plus minus variance of 5%, and the improvement is 4 times more precise. The cross-sell rate, old system 12% of deal, new system was showing 28% of deals, and the overall improvement is 133% increase. So, the proof is in the numbers: faster insights, sharper forecasts, and more revenue from every deal. I conducted one customer case study where the sales VP said, "We used to waste weeks reconciling data. Now we see which deals are most profitable in seconds, and our representatives close 22% more deals because they know where to focus." So, like this customer, you could be turning your data into dollars, not headaches. So the call to action is stop guessing which deals drive profit. Start knowing. And if you would like to have more detailed sales return on investment tracker for your hardware and sales, then you can visit us at finanalytixlab.com. And happy forecasting, guys. And if you would like to know more about any specific industry, for example, healthcare, manufacturing, so please let us know in the comments below, and we would like to do our next video based on your comments for that specific industry or area. For example, in manufacturing, every component, software license, and service contracts impacts your bottom line, but with complex deals spanning hardware, embedded software, and maintenance contracts, how would you know which combination delivers the highest return on investment? Legacy tracking is costing you millions, so let's fix that.